Hello everyone, welcome again. In this lecture we are going to start a question which is a past exam paper of value-added tax. I'm just going to share the screen with you so that you can look at the question. It is a BPP exam question. Let me just zoom the question. It is a BPP exam kit and question number is 240 and its name is Garfield. It was examined in March 2016, so we're going to do this question. Also, before we do this question, let me just tell you one thing as well. Also, if we go back to the start of the exam kit, let me show you that which questions can you do after doing the after we have done the value tax. So these are the questions which you can do when you have time for value tax. Just bear me 1 second. So questions. Now if you see on your screen now, it says value tax at the end. From question number 191 to question number 240. Now these are the questions, although you will leave some questions out of that because it says like 210, 211, then it says 215. So it is not from 191 to 240 altogether. There are few questions left out of that. So you will have to, you can do these questions from 191 to 240. Just list down these questions. You can find these questions at the start of the exam kit. So you can start doing these questions. Right now we are doing question number 240. Let's do this question together. It is on value-added tax. Now the most questions are MCQs one, but this question which we are going to do is not an MCQs question. So in the part A it says calculate the amount of value-added tax payable by Garfield for the quarter ended 31st of March 2017. So how much value-added tax Garfield has to pay? Let's see. Garfield has been registered for value tax purposes since 1st of April 2010. Garfield has previously completed his VAT return himself, but for the quarter ended 31st of March 2017, there are some items for which he is unsure that what to do with them, right? And they are written as OS, outstanding. Now the things he said, that things which I've already mentioned there, the information which are already there, that is correct. So you don't have to deal with it. You don't have to worry about that. However, the information which says OS, outstanding, you have to deal with that. So below that it says output VAT. Output VAT on the sales is already given to us, which is 22,500. So you don't have to worry about that. Then it says discounted sales. And it says note 1. So let's see what does it say. Note 1. On 10th of February 2017, a sales invoice of £4,300 was issued by G in respect of the standard rated supply. To encourage the previously late paying customer to pay early, Garfield offered a 10% discount for payment within 10 days of the date of the sales invoice. The customer paid within 10 days. So the invoice has not been taken into account in calculating the output VAT figure of 22,500, and this is the only sale for which Garfield has offered a prompt payment discount, which means he said that he said to customer that I will give you 10% discount if you pay within 14 days, and customer did pay within 14 days, and it said 22,500 of output value tax does not include this figure. So how much is the figure? Let's apply the discount and let's take the value tax. Here it is. Here it is. So discounted sales, how much was it? £4,300. Let me grab my calculator. £4,300. So we'll take 90% of that because 10% discount is given. 38,700 is the amount, and 20% value tax on that, which is 7,740. All right. So under this section where it says outstanding for discounted sale, under OS we will write down this figure which we have calculated, 7,700 something. Right, then equipment, note number 2, it says equipment. During the VAT quarter, during the quarter ended 31st March 2017, Garfield acquired some new equipment at a cost of 12,400 from a VAT registered supplier situated in the European Union, right? So he has made a purchase from the country within the European Union, which means that we will calculate the value tax, and it is standard rated or what? During the quarter, Garfield acquired some new equipment at the cost of 12,400 from a VAT registered supplier. So 12,400 is the price of that. So we'll apply 20% value tax on that. So 12,400 multiplied by 20%. Now this 2,480, this is the amount which we have calculated for equipment. Now please remember, because we have purchased it from a country within the European Union, so this equipment amount will go not only to output tax, the same amount will go into input tax section as well. So the net effect is going to be 0. Why we are doing that? Because we have to fulfill with the European Union regulations, and we also have to fulfill, we also have to satisfy HMRC as well. So that's why we are doing both things. So under equipment section, we will put this figure 2,400 something. Then it says fuel scale charge £60, so it is already given, you don't have to worry about it. Input VAT purchases is already given. Motor car 0. Let's go to, no, there's no information, so it's 0, so you don't have to worry about it, it's already given. We only have to worry about OS ones. So then it says equipment again, so the same figure will go here as well. Same figure which we have already calculated, 2,400 something, we will again put this amount here too. Impairment losses, number 3, note number 3 where it is. Impairment losses. On 31st of March 2017, Garfield wrote off 3 impairment losses. Details are as follows. Now these are impairment losses, these are bad debts. Now in bad debts, what we have to do is, we can recover value tax from HMRC if it has been more than 6 months. So if it has been more than 6 months since the payment due date, then we can recover from HMRC. So what is the date? A quarter is ending on 31st of March 2017. So first payment is on 29th of August 2017. So August, September, October, November, December, January, February, March, April, March. So it's been 7 months. So yes, this amount, £1,400, this can be recovered from HMRC, right? So this amount can be recovered from HMRC. Then the next one, it says on 12th of October 2016, so October, November, December, January, February, March. So it's been 5 months, so we can't recover this one. And the November one as well, so it will be 4 months, so we can't recover that one too. So only amount which we can recover is 1,400 one. Right, so because it has been more than 6 months. So it is impairment losses. Then it says entertainment to UK customers. Remember that UK customers, we cannot recover valid tax on that one. However, we can recover on the overseas customers. So note 4, overseas customers. During the quarter, Garfield spent £960 on entertaining overseas customer. This figure inclusive of VAT. Now 960 is inclusive of VAT, so we'll have to calculate VAT on that. 960 multiplied by 20 over 120, because it is inclusive of VAT, so it is £160. So this figure, £160 will go there under the overseas customer section. Likewise, motor expenses, number 5, we'll have to see this one too. Motor expenses. Motor car was purchased on 1st of January 2017, is used by Garfield 60% for private business mileage. So it is business as well as private use. So if you have purchase price, you cannot recover value tax on that. But it is not a purchase price. During the quarter, Garfield spent £1,008 on repairs. Now on repairs, the whole amount can be recovered, right? So 1,008 multiplied by 20, that is the amount which can be recovered from HMRC. Then it says £660 on fuel for both his business and private mileage. Both of these figures are inclusive of valid tax. Sorry, it was inclusive of valid tax, which means that 20 over 120, so 1,008. And another thing as well, the fuel, £600 fuel, on this amount as well we can recover the valid tax. Excuse me. Reason is because it is both for business and private use, and there is no scale charges given to us, so it will be recoverable. So 1,008 plus 660 multiplied by 20 over 120. 278 is the amount which is recoverable from HMRC. So this is the amount for motor car as well, which we will put under this section, motor expense section. And the net amount, which is whatever the net amount is, it is going to be the VAT recoverable or VAT payable. Right? So we have done the part A of this question. In part B, it says, state which VAT schemes Garfield is currently permitted to use and explain with supporting reasons which one of the available scheme would appear to be most beneficial for him to use. Your answer should be confined to the information given in the question. You're not expected to explain how any of the schemes operate. So it is only 3 marks worth of anyway. So you just have to tell him that which scheme can he use out of the 3 schemes which we have studied in our previous lecture. Flat rate scheme, cash accounting scheme, and annual accounting scheme. So you'll have to see. Let's read the additional information. It says Garfield does not use cash accounting scheme, annual accounting scheme, or flat rate scheme, but has read that the use of these schemes can be beneficial for small businesses such as his. Garfield's VAT exclusive turnover is over £450,000. Currently £450,000. Now it is £450,000, which means he cannot use flat rate scheme. For flat rate scheme, the limit is £150,000, so he cannot use flat rate scheme. However, he can use cash accounting scheme and annual accounting scheme. And it says it is expected to steadily decrease over the coming years. He pays for most of his purchases and expenses on a cash basis, but allows many of his customers 30-day credit when paying for the sales. So he can use annual accounting scheme and cash accounting scheme. If he use annual accounting scheme, there will be one benefit, which is only one tax return per year. However, because we have seen earlier as well, he has got some impairment losses, so which means he's giving something on credit and the customer might pay, might not pay. So he will be better off using cash accounting scheme. In that case, he will only pay to HMRC if the customer pays to him. So I think he will be better off using a cash accounting scheme because he will get automatic bad debt relief. And this information is more than enough to earn 3 marks. Right? So that's it for this question, and that's it for our value tax, and that's it for our F6 too. So our F6 syllabus is finished. So I hope that I will not see you again, especially in this paper. So you might see me in other papers, but I wish not to see you again in F6. Good luck for you. Work hard and do the questions which I've asked you to do in every section, and I will not see you again, and goodbye.